Good afternoon, everyone, and thank you so much for joining us today. My name is Leanne Statuto, and I'm the coordinator for the Responsible Business Coalition at Fordham's Gabelli School of Business. I have the honor and pleasure of introducing Gina Woodall, the president of Rockbridge Associates, a leader in custom market research and consulting for services, technology, and nonprofit organizations. Rockbridge Associates is the partner of the Gabelli School for the American Innovation Index and has been for the past 4 years. Gina has more than 20 years of experience in the marketing research profession and has an MBA from George Mason University with undergraduate degrees in decision sciences and marketing. Following Gina's presentation, she'll be joined by Charles Colby, the chief methodologist, principal, and founder at Rockbridge Associates for a Q&A session. So if you have any questions for Gina and Charles during this time, please feel free to use the Q&A function in Zoom as we'll field questions from there. And with that, I invite you to all please join me in welcoming Gina Woodall. Welcome, and thank you for being here.
Thank you so much, Leanne. Let me get started. Great. All right, I am so excited to be here for our 4th annual conference. We have so much to share with you. So much has been happening in the past year. What I wanted to do today was just introduce you to the American Innovation Index and share some insights from this year's study. I'll talk a little bit about the vision and the scope of the AII. I will introduce you to the much anticipated 2021 winners. And I will talk about why companies should care about being at the top of our winner list, why innovation does matter. And then I'll talk a little bit through some case studies about the reasons customers view companies that they do business with as innovative and socially innovative. So first, let me start with what is the American Innovation Index. It is definitely an ambitious research program that we do here. And it basically quantifies the innovativeness of nearly 200 companies across 20 industries. It is based all on the customer's viewpoint about those companies that they do business with. It is not based on analysts or industry experts' feelings about the companies and their innovativeness. It is an online survey that we do with 6,000 US adults, and it comprises over 28,000 customer relationships that they have with those companies. And we ask customers to rate the companies that they do business with on several key metrics. Obviously, innovation is the top one. We ask them a series of questions around how innovative the company is, how creative, how well it changes the market with its products and services, and if it's a category pioneer. And those go into our American Innovation Index. Social innovation is the other big area of the study. This is a measure of how well the company innovates to benefit society and the environment. So we use measures like having innovative offerings to benefit society and the environment, prioritizing the social good, and creating innovative solutions to benefit society and the environment to make up our social innovation index. We also get key metrics on customer loyalty, as well as the attractiveness of doing business with the company. The sectors that we include in the American Innovation Index, there are 20 of them listed here. And within those, we measure 175 companies. These are focused on the top consumer-driven sectors of the US economy. So primarily consumer-driven rather than B2B. And the companies that are chosen to be included are the largest US companies, Fortune 200, with large consumer businesses. And we've also added some market share leaders that are not Fortune 200 as well to round out our list. So these are the results for 2021. And as you can see over time, we're seeing an increase in innovation. The American Innovation, so measuring customers' perceptions of the general innovativeness of a company, you can see again is up this year after a big jump last year. So the pandemic continues to spur innovation. Socially, social innovation, measuring companies' innovation to benefit society and the environment. Again, we see another increase within that as well. And I think overall, we're just seeing again that it's been another challenging year for companies during the pandemic, and it's really affecting their businesses, but they're responding very positively in their business models to these challenges and they're continuing to increase innovation and social innovation overall as experienced by customers. So you'll hear more in a little bit about company strategies for innovation and social innovation as well, to see how they're making these changes and increasing innovation. Another piece of this, we wanted to dig a little deeper this year and look at this sector by sector and how innovation and social innovation is different by sectors. And we ended up kind of splitting this between what we're calling the crisis phase from 2019 to 2020 during the height of the pandemic, and kind of who was doing well on innovation and who wasn't. And what we found is that every sector across all 20 sectors did grow in terms of innovation because they were forced to innovate in the very trying time, obviously, for all companies. The biggest winners during that phase were the tech industry, banks, delivery services, cable and ISPs, auto insurers, and health insurers. Now that we're moving closer to getting out of the pandemic, we all hope, in this reinvention phase from this past year, things have changed a little bit, and we're seeing that the big winners here this year are obviously around travel. It's being recognized for its investment in innovation by customers most, as well as in life insurance and the wireless industry. Unfortunately, banks and delivery service are most likely to have lost ground with customers on innovation in the past year. So that's what we're seeing sector by sector. If we go to the business level, I want to introduce our 2021 winners this year. Each year, we recognize the top 20 companies on the AII and SII out of our 175 companies in the study across those 20 sectors. On the left side are our American Innovation Index winners, and on the right are our social innovation winners. And in that center circle are the ones that are leaders in both the AII and the SII, true transformational companies. The top 3 most innovative sectors this year on the AII and SII are automotive. You can see a lot of those brands in the center: Ford, Toyota, Honda, Hyundai are leaders in both the AII and the SII, and GM on the right for social innovation made the top 20 this year. The next most innovative industry are consumer durables and equipment manufacturers. On the left, you can see Samsung, Weber, Goodyear, and John Deere. Goodyear and John Deere also make the top 20 for the SII. So again, transformational there. And our third most innovative industry are the lenders. You see SoFi and Loan Depot are both top companies on the AII and SII. So we want to just congratulate them all on this accomplishment. Again, you're going to hear from a lot of these winners and category leaders on their approach to customer-focused innovation and social innovation in our sessions in a few minutes. But first, let's talk a little bit about why customer-perceived innovation should matter to companies. Why should you strive to be at the top of this list? Our science shows that innovation is a strong driver of customer loyalty. So starting with customer innovation on the left, successful companies, they're able to ensure that their innovation assets pay off. Their R&D, their culture, their people, technology, IP, all of that shifts downstream when they're successful in creating this customer perceived innovation. So the customer experience means that they're noticing changes in their offerings, in the value proposition, and how it's delivered to them, and how they're treated as customers, and the space that they're treated in, the physical and digital facilities. They're seeing changes in those things that result from that company's innovation. So they're noticing that. That influences their emotions. They're feeling pleasure. They're excited about the company. It makes them feel that it is innovative. It makes the business attractive. It's who they want to do business with when they see this innovation flow down. And ultimately, that leads to customer loyalty. But what we've also found that when customer perceived innovation strongly correlates with current and future loyalty, it results in higher financial returns. So as we've shown here in some of our early data on the tech sector, a high innovation index in 2018 correlated with industry adjusted abnormal returns for the following year, again, for the tech sector. We found a very strong direct relationship between customer perceived innovation and ultimately financial returns. We also looked at social innovation, and while it's not quite as strong, it does have a relationship. It correlates with financial returns as well. So social innovation does matter to the bottom line. And as a comparison, we looked at the Net Promoter Score as we measure loyalty as well in this survey. And it has a weak and non-significant correlation with stock returns. So basically what we're finding is that satisfaction reflects success in the current environment, but it's really not a guarantee that there will be success down the road for the company. And as Dr. Andreasen from the Norwegian School of Economics likes to say, satisfaction is the price to pay, but innovation is the price to stay. So again, customer perceived innovation really is something that we feel is a key KPI that companies need to measure and track to understand their success over time and their advancement in that area. So how innovation impacts financial returns, as you saw, among tech-driven firms, customer perceived innovation strongly and directly impacts future financial returns. In other industries outside of tech, the relationship between innovation and financial returns strengthens when disruptors enter the category. So the disruption, though, is not necessarily technology that we're seeing, but it can include other changing factors like in information, speed, cost, and availability. If you think about Amazon and offering their same-day delivery, really revolutionizing that delivery service, it's giving the consumer speed. Trader Joe's with its exceptional quality and low prices is another example. And Uber, you think about its technology, but it's the ability to pay for a ride through a credit card, not cash anymore to a cab, and have a fixed fare, truly innovative for that industry. So what we see is if the industry is static, or you fail to notice that outsiders are starting to chip away at market share, the relationship between customer perceived innovation and financial returns seems very flat. But when you add disruptors to the plot, the curve becomes more steep, like you saw with tech, and innovation makes a bigger impact on those financial returns. So starting in 2019 in the AII, we added disruptor companies, more of them, into many of our industries, and we're working on the analysis now to show those linkages between financial returns in the industries. So in this year's study, we also included some questions to answer the question of why customers find companies they do business with innovative and socially innovative. So I'm going to show you a case study here for customer perceived innovation of financial services. And then I'll show you one for social innovation around the lodging industry. So this includes a mix of banks, credit unions, card providers, and top fintechs that we include in the study. And these are their AII scores on the 0 to 100 scale. And you can see that PayPal outperforms all others on customer perceived innovation, with Navy Federal Credit Union second and Venmo in third. PayPal actually ranks 19th out of 175, making our top 20 list on the AII. Navy is not far behind, it's 27th, and our top traditional bank/credit union in the study. Compare that to Barclays at the other end of our list here, and their number 172 out of 175. So a big range here, and I think this highlights something else that's important to understand, is that your industry doesn't have to drive your success in customer perceived innovation. Banking is one of the least innovative industries we study, but yet PayPal is ranked highly, as well as Navy Federal Credit Union, ranked highly across the 175 companies in 20 industries that we study. So your industry doesn't have to drive your innovation status. So what makes PayPal innovative? We looked at this in comparison, PayPal in comparison to Barclays at the other end of the spectrum, to see and ask consumers what makes these companies innovative. What we're seeing for PayPal, it is viewed most likely to be easy to do business with, easy to do things on a mobile device, and safe and secure to do business with. Those are the top 3 reasons customers list them as a company that's innovative, compared to much lower percentages for Barclays. So you can see customers really recognize that PayPal is a company of continuous innovation. They already had the infrastructure built going into the pandemic for large-scale contactless payments, and they grew substantially during that time, but they also continued to innovate. So thinking about is easy to do business with and easy to do things on a mobile device, PayPal just makes it simple to purchase. One click online checkout button, and now they have in-store QR code payments, easy for customers to use. They recently launched new products like Buy Now, Pay Later to help customers, give them flexibility when making large purchases. And as one of the customers said in our survey, they are always coming up with new ways to use their service. That continuous innovation that makes it easy for them to do business, and safety and security. In terms of safety and security, PayPal, addressed one of the big potential barriers that they would have had to usage, and that's that safety and security. Being able to create a very streamlined process that makes it easy to create a user account, and they also implemented a very strong security system. So customers point out in our survey, quote, "They are the most trustworthy that I have experienced in online banking apps I've tried. I wouldn't go anywhere else now." So PayPal is really an innovation leader because they're creating innovation that has a direct, positive, and noticeable impact on the customer experience. Now let's look at social innovation and look at the case study of the lodging sector. And you can see that Airbnb outperforms all other major lodging brands on customer perceived innovation, followed by Hyatt, the top major hotel chain. Airbnb ranks 18th out of 175 on social innovation, and Hyatt ranks 19th out of 175. So both are in our top 20 winners. This is in comparison to Motel 6, who's ranked 131st out of 175. So again, a similar finding here that your industry does not have to drive your ability to be a social innovation leader. So what makes Airbnb socially innovative? And again, socially innovative to benefit, this is innovation that benefits society and the environment. The top 3 reasons that customers cite as reasons Airbnb is socially innovative are because it helps them save money, it creates economic opportunities for people, and it creates ways for people to interact or be a part of our community. So saves me money might be a little surprising to you as a top response for being socially innovative. But we know that firms that are socially innovative, we know that customers who consider firms socially innovative, when they go out of their way to meet the needs of customers, in this case, helping customers save money on lodging. Creating economic opportunities is another area. This is kind of reflective in that Airbnb introduced a new onboarding process to make it even easier for hosts to join Airbnb and take advantage of the travel rebound right now and provide a way for them to earn income. So they've introduced new technologies to automate the process of arranging photos of a property based on guest appeal. They have smart text suggestions in helping hosts write titles and descriptions for their property, and they're integrating real estate data that helps autofill some of the details like the number of bedrooms and bathrooms, just making it simple for hosts to take advantage of the opportunity to earn money from their property. And then creating ways to interact or be a part of community. I'm sure you all are aware of Airbnb offering Airbnb experiences that are one-of-a-kind activities hosted by local experts that foster learning about local cultures, their adventures, cooking experiences, native animal adventures, all kinds of things, but really helping guests be a part of that local community and learn about it. As a part of that, they also have social impact experiences to raise awareness of local and global causes by allowing hosts to partner with local nonprofits to create experiences related to social impact. So just another way that it's very noticeable for customers to see Airbnb's social innovation. And what you're seeing with Airbnb is really part of a larger finding that we're seeing with social innovation in the study. We feel that social innovation really has 4 layers to it. At the lowest level, we're seeing customer perceived social innovation is about improving the customer's well-being. It's not just about satisfying a customer, but it's improving their lives. And it's like Michael was saying, adding value to them in some way. So helping them save money, making processes more efficient for them, giving them greater convenience. Those are all things that customers recognize as things that companies are doing to be socially innovative, benefiting society and the environment. At the next level is when a company co-creates with a customer. So think about when you go to a retailer, you make a purchase and the cashier asks you if you'd like to round up your purchase amount to donate to St. Jude's. They're involving you, the customer, in the effort to be more socially conscious and raise awareness of that. And then at the third level, companies benefit their customers' local community, such as raising money for charities, or having their staff volunteer, encouraging them to do so for local charities, being out in the community and benefiting it. And then at the fourth level is that highest level where you're benefiting the world and beyond, such as pledges to reduce carbon footprints, using sustainable materials and products. But what we find is as you go higher in the framework, it's harder for customers to recognize a company's social innovation efforts. And companies really have to share their stories so that their customers notice these changes, notice this innovation that's going on within the company. So finally, just to wrap up, key takeaways, we see that companies that innovate enjoy higher customer loyalty and increase the bottom line. I've told you several times, your industry doesn't determine your innovativeness. Everyone can be an innovation leader. You need to ensure your effort and investments reach customers downstream to really impact that bottom line. Customers need to notice the innovation. It needs to affect them. Innovation is a powerful strategy to drive growth in a crowded sector where satisfaction is just not enough. And understanding why customers believe you are or are not innovative and socially innovative compared to competitors can help you prioritize your investments. So that's all I have for you. I hope that gave you a little more insight to the American Innovation Index. I really encourage you to visit our website in conjunction with the RBC, the AmericanInnovationIndex.com, as well as follow us on social media where we're putting out stories all the time around innovation and social innovation. And please feel free to contact me directly if you have any questions or you'd like to talk about how your company can measure and learn how to be more innovative and socially innovative. Thank you.
Gina, thank you so much. Thank you so much for joining us today, for leading this research and for sharing all those wonderful trends. We'll now open it up for Q&A and we invite Charles Colby as well here. I think the first question that kind of coincides with the keynote today is the AII measures innovation and social innovation, as we've discussed, and we find that they're related, but how can a company be successful financially? Is it possible to be successful financially in one without being good in another? And we talk about sustainability all the time now, and how do the two overlap? Can you be innovative without being sustainable and vice versa? Would love to hear your thoughts on that.
Yeah, I think we have done some prior research where we looked at that companies really benefit from being high on both. And we call them, as I mentioned, the term transformative companies, where they're really making a difference on both. If they're just high in terms of just regular innovation, and not really thinking about the greater good that's there, you're really you're just a disruptor, not moving forward and really helping the social good.
And we know that both areas of innovation, customer-focused and social innovation, ultimately will impact loyalty, but they seem to work in different ways. The aspects of social innovation, just feeling this is a good company to do business with, they do good things, I respect them, it tends to affect more through those being satisfied with the relationship, the pleasure emotions that we talked about earlier. And then the business innovation, doing new and different things and how you do business with customers, those affect the excitement emotions, and they stimulate more of an attractiveness to the brand and then ultimately loyalty. But both of them will ultimately drive loyalty and the bottom line.
Absolutely. And there's definitely been so many studies showing that consumers are more interested in sustainability over time of a company. So this definitely coincides. Another question we just received is, other measures of innovation tend to focus on technology leadership. Looking at the winners of the AII, there appear to be other things customers care about. What are some of these other things?
Really, it's about changing the way business is done. It doesn't have to be directly related to technology. Sometimes technology is an enabler. I'd give a very simple example. If anyone has used a taxi cab, say 10 or 15 years ago, one rule was always you had to pay in cash. And if you went to a big city, you'd have to carry a lot of cash in order to get around. But then one thing Uber did was not just adding apps and making it convenient and having a new business model, also simply allowed you to pay with a credit card. It changed a very simple thing. It had nothing to do really with technology. They just found arrangements and made it part of the proposition. And then you look at other examples of Uber, they would solve problems of telling you how much your fare was in advance, as opposed to having the tension of waiting and showing you where you are in the mapping. Taxi cabs did not do that until Uber came along. So you can do things that are very simple or non-tech related that comprise innovation.
Absolutely. And we have another question that's very interesting, and I'm curious to hear the answer. A trend on the margin is growing roles of spirit and spirituality in the workplace. Did you pick up any indicators in that area?
That is a good one. I'm not sure we have yet.
Actually, I would focus on the graphic we showed earlier and the one that shows about benefiting the customer. And we'd have to really dig into the data, but I think there are some examples out there where the way that it improves the customer is not so much simply giving them a material benefit, but it somehow leads to a greater outcome. I mean, one sort of marginally related to that is the examples with Airbnb, creating a place for community, a chance for people to gather. It's a type of benefit that goes beyond the direct financial or pleasure aspect of using a service. So I'm sure there are some there, and some of the brands I think may actually tap into that, but we haven't delved into it. I think we'll actually look for some examples of that as we go forward.
Excellent, thank you. And we'll go to one final question before we move on to our panelists. You'd mentioned that innovation is a key KPI to understand success. I'm curious how companies can measure what drives their customer perceived innovativeness and social innovativeness.
Yeah, we have the proven metrics that we've been tracking over time. So we have benchmarking and things. It's something that we can definitely follow up with them on to share that and talk about how that can be done.
Yeah, and the metrics were developed at the Norwegian School of Economics, our colleagues, and they're actually using these in parallel studies to the one you're seeing here in several countries right now. A couple of them in Scandinavia, and then they have efforts going on ready for Australia and many countries in Europe. So they've been validated metrics by an academic institution.
Excellent. Well, thank you both so much. This has been so informative, and congratulations to all this year's awardees. And now we'll move on to some of the panels. I believe we have another video coming up. But Gina, Charles, thank you so much. Very much appreciated.
Thank you.
Thank you.